Hi, everyone. This is Maheen, and welcome to the CanadianSME Small Business Podcast. Today, we are talking about how to build a bulletproof corporate foundation, how to shift from reactive legal firefighting to proactive strategy, and how to position your business for a highly lucrative exit in 2026. To scale safely today, small businesses and female founders need to look past generic template setups and focus on robust corporate governance, value-based contracts, and protective asset frameworks. To discuss all these amazing things, joining us is Elena Favaro Viana, the founding and managing partner of EFV Legal Professional Corporation. Elena is an elite corporate lawyer and national speaker who has spent her career empowering women in business, small business owners, and entrepreneurs with the practical legal tools that they need to protect their hard work and scale with absolute confidence. So there's lots to cover. Without
Wow.
a further ado, let's welcome Elena. Elena, it's a wonderful pleasure having you on the show with us today. Welcome to the podcast. How are you?
Thank you so much for having me. And what a mouthful of an intro. So
It
beautiful. It's always
was.
so nice to be like, who's she talking about? It's
It
nice.
is you. It is all you. And no, it was a mouthful, but a very impressive bio for sure. And
Thank
we can't really
you.
wait to break it down for our listeners. And on that note, would love to open our discussion, Elena, by understanding how we really built a bulletproof corporate foundation because many small business owners they treat legal tasks like a reactive emergency measure, only
Yep.
calling a lawyer when something goes wrong instead of
Yep.
really planning ahead. So tell us, why is protect proactive legal planning so important for long-term business success?
So Hollywood has done a really, really good job of making legal sound scary and being the thing, I'm going to sue you, I'm going to go to court. It's really demonstrated that you only need legal when there's a problem in your business. But small business owners should really be focusing on being proactive with their legal. The earlier you get involved with legal, the better it is for your business. And I think a lot of people forget that business is an inherently legal structure. So a lot of the founders that we work with or the business owners that we work with, they don't want to invest in legal. They think it's not sexy. But the sooner you invest in it, the sooner you start building the structure, the better it is for you from a liability perspective because you can minimize your risk from day one. And also from a tax perspective, you can actually save more money and contribute to wealth generating activities earlier in your business journey.
Hmm. That is a good starting point, Elena, and it's a crucial perspective because it is amazing how much smoother a business can scale when the legal foundation is built correctly from day one rather than trying to fix broken structures later. Now let's explore
Yep.
how business owners can stop fearing the legal process and start using it as an active partner to scale their profits. Tell us, how can legal strategy help founders achieve growth goals?
First things first is figuring out your business structure. So, depending on where you're at in business and how much money you're making, each business structure will give you different benefits. So, the biggest thing I see is people will go online and they're like, register a business, and they'll be inundated with a bunch of software or Google ads telling people to incorporate their business. But if you're starting a business or you're profiting, and generating revenue under 100,000, that is an expensive business structure for you that isn't going to be the most beneficial. So getting the advice of the right business structure is the most important. I also see on the flip side, some people are making too much money. And, what that means is obviously different for everybody, but they're making too much money. They're paying too much taxes because they're in the wrong structure, a foundational business structure. So understanding the right structure for you and how simple or complex that could be is going to make a huge difference to how much money you're going to save at the end of the day.
Hmm. That's a fantastic point because seeing your legal setup as an investment that protects your cash flow completely changes how we make
Yes.
growth decisions. Now let's look at the modern digital landscape and talk about the hidden legal traps of using automated tools for business agreements. What are the risks,
Mm.
Elena, of using AI generated legal agreements?
I love this question. I am not a hater of AI, and I really need to preface that. But what I'm seeing is a clear division in business owners, those that are trying to save a buck by using AI generated contracts, and then the other camp, which I'm saying honestly, I'm coining it a little bit more of the sophisticated business owner that is running to their lawyer instead, because the sophisticated business owner is understanding that AI is only taking us so far, and without the right lens on how to interpret the contract that's being generated, because I've seen some of these AI contracts, like they look beautiful. Like they truly look professional. But when you start looking under the hood, all you're doing is opening yourself up to unnecessary risk, unnecessary liability. And also, as a business owner, you don't know what it says. So, how do you enforce your own business policies if you're not even sure what your contracts are saying or how they're protecting you? So, there's one camp that is saving money and going to AI. But the more sophisticated camp, and truly my experience, is saying, listen, AI did this. I need you to look at it. I need you to look at it and I need you to actually see what's wrong with it. And what I'm seeing is on the lawyer side, lawyers are actually charging a premium now for reviewing AI generated contracts. It doesn't make lawyers' jobs easier. It actually makes it harder. And it doesn't, a lot of clients think, oh, I've done half the work. It's easier for the lawyer, so it'll be cheaper. It's actually more expensive. So go to, your legal partner and actually get them to draft something that's bespoke and custom for you, that's going to work for you. Don't just use AI as a band-aid. It might work if you are operating a lemonade stand, but if you're running, a profitable business that's actually successful and scalable, it's only going to break down sooner.
That's a valuable advice because trying to save money on automated contracts can end up costing us thousands and thousands in unprotected
So
liabilities,
much more.
legal disputes down the road. So thank you so much for highlighting that for our listeners, Elena. Now let's shift our focus to the ultimate goal for many founders out there and discuss how to prepare our business for a successful sale. Elena, how can business owners prepare their company for a successful exit?
I love this too. So, first things first is when you start a business, you always need to be thinking about the exit. And not enough business owners are doing that. A lot of business owners are looking at how to increase their lifestyle, how to make more money, how to get more freedom, but they're not actually thinking about how to exit the business. And when you start something, you always think about the end. So, with that in mind, when you're setting up your business, you need to start thinking about the separation of yourself from your business. Does it have a separate bank account? Does it have a separate corporate entity? How is it protected? What systems are you using? And how easy is it to offload your company to someone else? So, we do a lot of mergers and acquisitions at the firm. And when we're selling a company, we enter a period called due diligence where we look under the hood of a business and we ask for all of their corporate records and documentation. And the majority of businesses that we've worked with so far, alarmingly, don't have their corporate minute book up to date, don't have their directors or officers up to compliance. They're not filing their annual returns. And so it becomes a big cleanup project for the person selling versus the business owner that has been preparing for sale from day one, has been keeping that updated every single year, and it isn't a costly mistake later on when they're trying to sell. So keeping your records clean is one way to go about it. The other way is if you have staff, if you have contractors or employees, documentation, please. Like we need, not only do we need employment contracts or, independent contractor agreements that actually outline the job description, how much you're being paid. Because when we go to sell, we ask the seller to draft those documents on their dollar. So you might as well just have it from day one to make the transition easier. But also incident reports, like what problems have you had with your staff? Because the sophisticated buyer buying a business wants a business that's going to also run without them with strong systems. So they want to know where the problems lie and which of the staff members is a flight risk on the sale and on the transition. So I think when we're thinking about selling, it's keeping it clean,
Mm-hmm.
documenting everything, and having the right legal mechanisms in place in order to also increase the valuation and spreading out your fees. Like there's no point to try to sell your business for, I don't know, let's just say, $500,000 for argument's sake. You're trying to sell your business for $500,000. But on the sale, not only are you going to get hit with taxes, you're now going to get hit with, a $50,000 legal bill to just clean it up when you could have been doing that all along and then increase the profit on the exit and increase the right strategy and structure on the exit. So just do it incrementally throughout. Have the plan of how you're leaving when you start.
Now let's head into our final wrap up to gather one last piece of professional wisdom from for our audience this quarter, especially. Elena, what is your top piece of advice for business owners that are looking to protect their assets and reduce risk?
Build your advisory team. Okay. You are an expert in whatever it is that you do as a business owner. Build the right advisors around you. Okay. There's a reason why the wealthy have routine lunches with their lawyers and accountants. So you should really have the best bookkeeper, the best accountant, the best lawyer, the best financial planner, the best insurance broker. And these people should all be communicating with each other. That is how it's going to alleviate the burden from you so that they can get to know your business and you're not frantically trying to call a lawyer at 1 o'clock in the morning that has no idea who you are, right? A business owner that, has engaged in these or invested in these relationships will have the upper hand always at the end. So build a good, strong advisory team.
That is a great reminder that true
Mhm.
business resilience, it really comes from proactively shielding our brand and contracts before the challenges arise rather than waiting for an emergency. Thank you so much for your time and legal expertise with us today, Lina, and we hope to have you back with us with much more updates. Thank you.
Thank you so much. Appreciate that.
And listeners, that was Elena from EFV Legal Professional Corporation showing us how to build a bulletproof corporate foundation, stay safe from generic AI contract traps, and structure our businesses for a successful exit in 2026. Thank you for listening to the podcast. Please be sure to subscribe and visit CanadianSME.ca for more helpful resources. And to learn more about how we're supporting the ecosystem, please visit smbfoundation.ca. Before we leave, let's give a shout out to our partners, UPS and ADP, for their ongoing support. Join us next week as we explore our next important topic. Until next time, please keep innovating and keep growing.